So typically what private equity firms do, they go into established businesses and try and take a minority stake or, a majority stake, basically not a small percentage, 10, 20, 30% plus of the company, own it and try and make a radical change to improve that company, and in the future sell it off for a profit to a bigger company, or if it's a private company, list it on the public stock exchange. So do an IPO, initial public offering, and they make a ton of money from that. What's going on, people? In today's topical or current affairs video, we are talking about private equity firms increasing their stakes into the world of Hollywood, media companies and streaming services. Essentially what's happening here is a lot of private equity firms believe that there's going to be fierce demand for streaming services going into the future. It's a big industry, and the reason for that is the revenues are there, the profits are there, the money is there, and it's been there for a long time. And as a result, Blackstone and Apollo, big private equity shops, are betting that, the demand is going to be there for a long time, especially in a world where we live in a post-pandemic world. A lot of people are at home, streaming services are booming, and so it kind of makes sense to see this kind of demand in this space. As such, Apollo, the private equity firm, bought a $760 million stake in Legendary. Now, Legendary is a Chinese-owned movie studio, and one of their big productions of recent times was Dune. Also, if you take into consideration the fact that US streaming services have pumped over $100 billion into TV shows and movies, it makes sense why private equity firms want to kind of get a piece of that pie. Apollo has put $760 million into Legendary, the Chinese-owned movie studio, but what Blackstone has done is somewhat different. They've gone and put $2 billion into setting up a new company, and it's being led by executives from Disney, so they kind of know what they're doing. Now, you're probably wondering, why is Blackstone gonna go to the effort of setting up a small company in this production space? Essentially, what they believe is, look, if we can set up a company led by industry experts, it will be a small, kind of like a startup media production company, and compare that. So actually, let's go off on a tangent for a second. When you think of startups, they have one key advantage compared to big corporates, and that is the fact that they're nimble, right? They can move fast. If they want to do something, decisions don't have to go through hundreds of layers like they do in corporates. At a startup, you kind of come up with an idea and you can get running with that idea. No layers of approval needed. So you're nimble, you can move fast. So back to Blackstone, that's what Blackstone want to do. They want to kind of create like a startup type of small company that's very nimble, with industry execs who are experts, ex-Disney, who will be running this. And because it's going to be small, it's not a huge player in the market, it's going to be able to kind of move fast and do things better than those incumbents who are already in the space, who have been around for a long time. Obviously, there's pros and cons to both sides, but when you're small, that's one of the benefits. You can be nimble, you can get things done faster. And that's kind of what Blackstone is betting on in this situation. All right, so here's where it gets interesting. You've got Blackstone, you've got these execs from Disney. They're working together and they created Candle Media, right? A new production company. Candle Media has gone and bought Reese Witherspoon's production company for $900 million. And then they went and acquired another production studio called Moonbug Entertainment. They paid $3 billion for that. And then they went and bought a $60 million minority stake in Westbrook, Will Smith's media company. So they're basically going around and buying different stakes in different production companies. So they're basically growing like a behemoth and occupying or buying small stakes or sometimes big stakes in all these other production companies. And so they're just going to keep growing and become a big player in that space. And the reason for that is because a lot of these businesses are considered not too expensive, or they don't require too much capital to get started. However, they generate a lot of cash early on. So typically in a startup, you are investing into the company and you're going to expect a negative return over the first few years. So there's a J curve, right? J curve basically dips at the beginning and then it goes up later on. So negative cash flows in the first few years, and then you expect positive cash flows later on. However, when you're investing in these production companies, media companies, they tend to not have so much of a J curve. They tend to, generate cash sooner than the traditional tech startup, for example. As a result, it's easy for private equity firms to just give the money that's needed and then start generating returns or cash returns sooner rather than later. This is obviously in the interest of Blackstone and the private equity firms because it means they generate cash sooner rather than later. So what's the end goal? What does Blackstone want to do with Candle? So it's putting all this money into this production company. What's the end goal? Typically, there are two routes. One, you exit through an IPO. You publicly list the private company into the stock market so people can access it and buy shares, and then that's how you raise money. You can expand it like that, so it goes public, right? And they will generate a ton of money, because when you go from private to public and you list on the markets, you naturally generate a shit ton of money through your public offering. And obviously the private equity firm Blackstone is going to make a ton of money. Anytime a company goes from private to public, you are getting access to a heap of money, and you know that's considered success. The exit strategy number 2 is getting acquired by a bigger player in the space. So let's say, you know, you started a company, it's doing well, it grows. There's always going to be a bigger company in the space, right? They might acquire you for a couple $1 billion or tens of billions of dollars, and so private equity firm Blackstone will kind of get a massive kickback because they own a lot of that company. So in case you didn't know, in a private equity deal, the end goal is typically either an IPO or being acquired by a bigger player in that same market.